Hey, folks out there, we're glad you're joining us today. I'm Christelle Bell, investigator for Let ABC15 Know, and we are talking about debt today. We are gearing up for our first phone bank that we host here at ABC 15. For Let ABC 15 Know, we host a phone bank monthly each month. And so we're kicking off the year. We want to get you straight with your finances. So, debt is what we are talking about tonight in our phone bank that'll start at 5 o'clock tonight. We want to bring in this wonderful guy here sitting next to me, Mr. Jim Triggs, the CEO and president of Money Management International. Money Management International volunteers are going to be answering our phone calls. So we want to have a conversation to talk a little bit about what we're seeing, how can we get on track, with our finances. So Jim, thank you so much for being with us today.
No
We
problem.
certainly appreciate it, taking out the time to help our viewers and help Arizonans, because that's what it's all about. So I guess the first thing is, first tell folks who may not be familiar with MMI, what does MMI do?
Absolutely. MMI is a national nonprofit. We help consumers with any sort of consumer financial matter. So you're talking about credit card debt today mostly.
Yeah.
So we help with credit card debt. We help with any sort of housing situation. If consumers are delinquent on their mortgage or looking to purchase a home, we can help with that. With counseling for those things as well. Really, any consumer financial matter. If a consumer is experiencing any sort of stress, they can come to Money Management and talk to one of our counselors and get really great advice.
Yeah, so counselors handle cases from all around the country, where you can call in and speak to counselors over the phone, and they help with all kind of consumer, as you said, related issues. And so that's the experience that they have today. The volunteers will be able to answer phone calls tonight from 5 to 7 in our studio. Talk a little bit about what your counselors say they've been seeing. We know a lot of times we hear, after the holidays, right? Folks, I've spent a little too much. I need to get my budget back on track. I went over my budget for the holidays. What do I need to do? This is a new year, new me, new finances. We hear all of these type of
Sure.
things in the beginning of the year, which is why we wanted to focus on this. So what are you seeing as far as with calls now and people calling in?
We're seeing a lot of consumers struggling, specifically with credit card debt.
Yeah.
Credit card debt nationally right now is $1.23 trillion and keeps climbing,
Wow.
all-time high. And on top of that, it's not just the balances that are higher than we've really ever seen. Delinquencies are really high. People missing payments, even rolling 90 days delinquent or worse.
Yeah.
That's higher than it's been since the pandemic. And even really since even the Great Recession back in 2007 or so.
And we were kind of talking a little bit about this because it's not, taking glamorous, luxurious trips to Hawaii and out of the country. This is struggling because we're just trying to make ends meet.
Yeah, during normal times, we would see consumers that maybe overspent, and usually always there's a life event that happens that changes the course. They had a plan to pay it off, but then something happens. What we're seeing now is that people are just using their cards to make ends meet. They're using it to pay the water bill. They're using it to buy groceries, to pay for gas, because all of their income is going towards their house, their car, their maybe other debt, just their living expenses. Everything's so expensive now. Wages have not paced with inflation at all. So if you make less than you're spending, it's really difficult to dig yourself out of that. And if you're finding yourself relying on credit cards, especially if your interest rate and you're paying just minimum payments, and your interest rates now are in the 23%, 27%, even over 30% sometimes, it's extremely difficult to dig yourself out of that hole, especially if you're digging the hole every month,
Right.
and you're going backwards every month.
And it's also because you incur these unexpected charges or expenses that you did not anticipate. My car didn't. People
Absolutely.
don't have the funds to, have that emergency fund or
Yeah.
have that savings. And
Emergency funds are drying up.
Yeah.
And they're just using it to pay off debt or keep their head above water.
Yeah.
And folks are just relying on credit. So as soon as you have a hiccup and you can't pay the credit, or you're just making minimum payments, it's extremely difficult to dig yourself out of it.
So explain, how does MMI kind of step in and help with that and help people get back on track or find a plan?
Sure. Number one, and a lot of consumers already know this before they come to us, but we need to know all the information. So we look at, what you have coming in, as far as your income for the whole household, and then we look at what you have going out. Very simple budget process, right? Money coming in, money going out. And then once we have that information, we can understand if a plan that we support with the support of the creditors is right for you. And the plan I'm talking about is what's called a debt management plan, or a DMP.
Okay.
And the way a debt management plan works is if you're in over your head with credit card debt, you're just making minimum payments, or even worse, you're falling delinquent and you just can't get ahead. A debt management plan, basically, like I said, we assess the entire situation, and then we come up with a plan for you to repay that debt to your creditors within 5 years or less. And the way we can do that is creditor concessions. We have deals with every major creditor in the country where they will reduce interest rates, some all the way to zero based on hardship. On average, we can get interest rates to 6 or 7% roughly. They'll reduce the payment amount you need to pay. They'll make you current after a few payments, so they're not collecting on you anymore. They stop over limit fees, late fees, all of that. And basically we set up a manageable payment that you make once a month to us, and we disperse that money to your creditors.
And that makes a big difference, because when you talk about interest rates that are 28, sometimes 34%, and you can drop it down to 6% or less. That makes a big difference.
It's a massive difference. So much more of the money that you're paying is going to principal to pay off the debt, versus now, if you're making minimum payments, most of your money is going to interest, and you're not even really touching the principal at all.
Yeah, I think the other thing is, when you understand about what you do when you drop the interest rate and you work out a deal, a concession with these companies, is, you close these credit cards. But then the other part of this is, and we've heard from, viewers who have used MMI who say it was also about the education of understanding why I don't need the credit cards. What do I use the credit cards for? How do I handle my debt in a way that makes sense for me and my budget? And that's the biggest part of what I like about what you guys do.
Yeah, we do. We support our clients fully. We have online education. They can call us anytime if they're on a plan. We have live, real people who will talk to you and work through whatever challenge. Not AI, real live people who will chat with you and work through whatever challenge that you're having, staying on the plan or otherwise. And I think really consumers, you mentioned the accounts closing. That's the catch, right? The creditors aren't going to reduce your interest to 6%, have you pay less, stop collections, and let you keep charging on the card, of course. So the cards are closed in the process of opening a debt management plan. Most consumers leave at least one card open for, for travel and other emergencies, or you need a credit card, right? But we advise them to pay it off every month. Don't carry a balance on it. And once folks do that and they see that they can live within their means and not have to rely on credit cards, it just makes life so much easier.
It
makes life so much better.
That's what happens.
You're sleeping better at night. You're not stressed about how am I going to pay off this $12,000. The average consumer we're seeing right now that opens a DMP, the balances are like $26,000.
Wow.
Which is, astronomically high, right? If you're paying 24, 27, 30% interest on that money, it's extremely expensive debt service to keep that going and not pay it off.
Yeah, I know we've been seeing this been trending a lot. We heard about the interest rate cap for credit card at 10%. Let me hear your perspective about that.
Well, I mean, on paper, it looks great, right? I mean, 10%. Oh, hey, swish, magic wand, 10% interest rates. That would be great for consumers who have 30% credit cards or what have you. But 10% on what? New charges, 10% on existing charges. Lots of ramifications for the banks with that, obviously. The Jamie Dimon, from the CEO of Chase, actually spoke on this today in Switzerland, I believe. And he said that 80% of Chase cardholders would be negatively impacted in some way if they had to do a 10% interest rate cap. And what I read into that is just availability of credit. The banks are saying they can't feasibly lend and make money at 10% because of the risk factors. So credit would just dry up. They would stop lending. They would reduce available credit. If you remember back in 2005, you were probably too young. In 2005, when the Card Act came out, which the Card Act was a law that went into place that banished the thing called universal default, for example. It was one of them. There's a lot of different attributes of the Card Act, but one of them was universal default. Well, when that happened, creditors felt that they couldn't recover their delinquencies with that law change. So they wiped out like trillions of dollars of available credit. Even consumers that had no credit risk got a letter saying your $25,000 credit line is now $5,000. Or if you had $4,000 on your credit card and you had a $10,000 credit line, they would say, okay, your credit line is now $4,000. It's the balance that you have. It was an unexpected consequence of the Card Act that they weren't looking for. So I would say the same thing would happen if there was a 10% interest rate cap across the board. It would just just annihilate consumer credit across the board for that year or whatever they're talking about establishing it.
So it sounds like more needs to be done. More
needs to be done. It would be great for the consumers who are struggling for sure.
Yeah.
But the feasibility of it, if now you can't get credit, and the only lending you can get is more predatory lending, like payday loans or things of that nature, that's not good for anybody.
Yeah. So talk about where people say, okay, I need a plan. Where do I start? Because I think that's the biggest thing is people like, I know I need to fix this. I know I need, something. I need a budget. How do I go about doing this?
It can be this simple, sitting down at the table just like this, and writing down or using a spreadsheet if you use spreadsheets,
right?
Just writing down who you owe, how much, and what your interest rate is, and then writing down on the other side how much money you have coming in, how much your living expenses are, rent, utilities, etc. So then, how much money do you have to put towards your creditors after that? If you have extra money over and above your minimum payments, well, apply that to your high interest credit card debt as fast as possible and pay it down as quickly as you can. That's step number one. If you find that you don't have enough money to make minimum payments, or you just have enough to make minimum payments and barely get by, that's when companies like a nonprofit credit counseling agency like Money Management can help, because we can create a feasible plan for you and help you get out of debt much faster, paying off much less interest while protecting your credit. You can take a minor credit hit when you close your accounts, because closing accounts can impact your credit score, but that comes back very quickly. And we see that folks that are on a DMP build their credit as they make every single payment, towards paying off their debt. Their credit score improves over time.
And so, one thing we talk about that too, because you said you guys, if we call, you need to know. One thing I love about it is there's no judgment.
No, absolutely
because we know people are struggling, and so when you call, it even feels like sometimes a burden is lifted just to be able to share, this is what I'm going through.
Absolutely.
And I need help, right?
Yeah, we have a podcast that we do, and the name of the podcast is Long Story Short. And we named it that because predominantly consumers call and start talking to the counselor, and then they want to say, all right, well, long story short, I lost my job. And this is what happened, or what have you. And that's why we named it that. But yeah, our counselors, our average tenured counselor, and these are mostly call center type jobs, has been with us 12 years. They don't leave. They stay with us.
Because they love what they do.
They love what they do. I feel like we treat them well too. We treat them as well as we can as a nonprofit. It makes a huge difference. Our culture is really good, but intrinsically they love helping people, and they get to help people every day. A counselor told me once, they said, the great thing about working at MMI is no matter how bad a day you have, you help somebody today.
Wow.
And that was years ago that they said it to me, and it's really latched on. So yeah, our counselors, no judgment zone. Everybody's had some sort of financial challenge in their life. I've had financial challenges in my life.
I have had
it is a fact of life. Predominantly everybody has had them. So we do not judge. All we do is look at how we can help in the situation today, figure out what your goals are, and then put you on track to meet them. And then we're there every step of the way with you along the way.
Love that. All right. So tonight, the phone bank, the lines will open. We put that number on the screen for you at 5:00. You can call, speak to an MMI volunteer that will be answering our phone calls for our phone bank. We'll be live from 5 to 7 p.m. And you can call in and speak to a volunteer to help you get your finances on track, to talk about whatever plan that you may have. So again, the phone lines will open at 5:00. They'll go until 7:00 tonight. That number is right there on the bottom of your screen. If you can't get through, keep calling for sure. And of course, if you always not able to get through, you can always reach out to Let ABC15 Know at consumer@abc15.com for more information about MMI. All right, Jim, thanks so much for being with us.
You're welcome. Thanks so
much to your volunteers and your organization for what you do as well.
Thank you very much.
All right, we'll see you next time.